Hello traders. In this video I will start to discuss stocks, but before a longer in-depth view about stock market, I will go right ahead and give you a bit of analysis of the most important and definitely most interesting development in the stock market for at least previous months, and this is no other than Meta, or parent company of Facebook, Instagram and WhatsApp. So here's the thing, every one of us uses Facebook, and every one of us knows what they are doing and that they are considered one of the most important companies in the world, because their reach of social media is unprecedented, and everyone is, as I told you previously, is user of either of their applications as WhatsApp, Instagram or Facebook itself, and that they make tremendous money from their ads, and their ability to influence social and political events probably is unprecedented. So, but here's the thing, at the height of their profitability, or I don't know how do they call it, but at the heyday, yes, heyday is the best term, at the heyday of tech companies, that was in the previous summer, their share price was $385 per share, and their market cap was 1 trillion. Now they are less than 300 billion, so they effectively lost 70% of their share. That is pretty substantial, and they have current net worth in the same levels as they had in 2015, which is 3 years before they made their IPO, and their customer base and ad revenues were significantly smaller at that time. So what happened? As you could see, I deliberately opened the news articles and research results for Meta earnings, and you could see that headlines are pretty much obvious. Shareholders went at anger at Zuckerberg. Mark Zuckerberg's pipe dream turns into 680 billion nightmare. Meta value has plunged by 700 billion. Wall Street calls it a train wreck. And pattern goes on and on and on. They are rambling about their inability to keep their financial situation in check, their inability to capitalize on its metaverse project, which looks like a failure, extremely expensive failure, and other things. As you see, this is quite disastrous. This is really funny. Jim Cramer, which is one of the faces of CNBC, apologized for his Meta forecasts, and this video was really funny. He almost cried there, but of course that's a show and he scripted that. But nevertheless, the point is, this is pretty spectacular company, and earnings or no earnings, this is one of the most leading companies, and we cannot ignore the fact that it's still a giant, and for foreseeable future it will be giant in social media space, and it will have huge influence over any of us, like extremely few amount of companies will have. So whether this price fall is justified, who knows? I think investors are somewhat angry. No, actually it's not true, because here is my explanation. The companies became popular or unpopular simply due to the psychological reasons. I don't know whether you recall that, and it's very difficult for me to get those news, but there was the time not that long ago that everyone perceived Zuckerberg as a wizard and some sort of god, and he basically was able to swallow up companies and buy them at a whim, and actually made pretty good deals on that, because the Instagram and WhatsApp, they were both companies. Actually Instagram didn't have any revenue, and I think it was bought for $12 billion. He did that and everything went to his plan, so people perceived that they are inventables, so people wanted to buy Facebook shares. Mutual funds were under pressure to please their investors, so they allocated those monies their funds in those stocks, and stocks climbed, and it went as a self-reinforcing pattern that things were good. Facebook invested and grow, shares grow, they became more popular, and thus their share prices grow as well, because if you see that they had some spectacular uptrends. I think what they had one of the best uptrends in recent memory, and nothing could go wrong. See from like 2016, look at those daily charts, look at those charts, from $25 to $80, then from 95 with small hiccup at 120, then from 120 to 200. Trend trader could made like laundromat of money if he wanted to. And then from 2018 till early 2020 there was there were actually no bear markets. Markets effectively went into range from 120 to 200. This is rather swingy market, but the overall market situation wasn't that good. It didn't fall that much. Even in COVID times it fell for like 20%, rebounded into 2 weeks, and then in summer of late spring of 2020 it went from 180 till 325. So it went like straight ahead like an arrow. It with one very small exception from how much that was from, just a minute, let's see how large that was, from $27 to $300 straight like a train without any hiccup. One exception was those ranging markets from around 18 till 20. But with exception of that, for 10 years markets went straight like an arrow. Of course, every reasonable person will expect some sort of corrections at some point, and Facebook went them. And people maybe overreacted, I don't know, it's difficult to say, but probably they believe that they are special, they believe their own delusions, but reality check came and Facebook paid the price. So it went from 320 to 120 like a rock from January till late October. So that's how it happens, when markets are popular, specific market is very popular, nothing gonna go wrong, they ignore every bad news and they go like a rock for almost infinite amount of time. But then something changes, reality changes, but most importantly people's perception of stock changes, because they have a lot of controversies about privacy data which they shrug off. They have huge complaints about their ad policies and how they behave towards their media buyers. They closed accounts, they had worst support system ever and things like that. And then they invested into projects which were very hard to explain for average investor, and eventually those factors combined into bad overall economic situation, and stocks reacted. And that's how they react. They overreact in positive ways, like we had here in these last years. And actually I actually am surprised how they behave so well, because those ad policies and attitude towards their media buyers was not horrendous. And then they probably slightly overreacted with that fall last week, but it was a symptom, it was consequences of broader actions which were done years and years before that, and markets at one point had enough. Whether it's overdone, I don't know, but my point is that is how it happened. People overreact in good times and they overreact in bad times. So excuse me for that, what the hell was that? And this is how markets work, overreactions, underreactions when they shouldn't have to be, because they are like reflection of our own nature. And this is very good example of that. I hope I explained to you into very convenient fashion without too much boring data, because if I would analyze earnings and make some cash flow statements, no one would listen to me, and 10,000 people do that at the same time. But I wanted to tell you about the idea of the fact that when things go good, nothing could go wrong and every bad news are shrugged. But if things eventually starts to go bad and they get the reality check, markets collapse. and this is how they have been doing for, I don't know, as long as we have organized financial markets. And maybe there are few other companies which will at some point follow similar patterns. I don't want you to to, to be suspicious or be mysterious, but that company produces cars and its name starts with T. They have very good pre-work done to make similar route as Facebook does, because actually Facebook is, in their sense, pretty solid, at least for now, and their business model is unprecedented. As this is what I cannot say about some other companies. So with that said, wait for my next video about stock market in general, and be sure to follow me